Welcome back to Investors Point of View. Hello to all our community members, students, and everyone tuning in. Today we are diving deep into the key figures from CHWY's fiscal Q3 2025 results for the period ending November 2nd. Our mission is pretty simple. Cut through the jargon, really simplify the facts, and get a clear picture of the company's health right now versus a year ago. So let's get into it.
Yeah, and what we're really looking for here is confirmation. Is CHWY making that pivot from just pure growth to, a highly profitable, efficient company? And the so what behind these numbers is that, yes, it seems the pivot is really working.
Okay, so let's start at the top. The basic health check, net sales. They clocked in at $3.12 billion. That's an 8.3% increase year over year, which feels pretty solid.
It's very solid, and their active customer base is also up about 4.9%, so now at 21.155 million. But the really interesting signal isn't just getting new customers.
It's getting more of the ones they have.
Exactly. Net sales per active customer also jumped 4.9% to $595. That tells you people aren't just buying food anymore. They're adding the treats, the toys, maybe even that holiday sweater for their dog, all from CHWY.
And nothing screams customer loyalty like auto ship. I mean,
Yeah,
that number is just incredible.
it really is.
It's now 83.9% of their total net sales. That's up from 80% just a year ago. That kind of predictability is just gold for planning.
It is. And that resilience, that stability you see in the top line leads us right into the profit story. I think the CEO's comment that profits once again growing faster than sales is probably the most important line in the whole report.
Okay, so break that down for us. What does that actually look like in the numbers?
Well, you look at their adjusted EBITDA. It's a key measure of their operational performance. It hit $180.9 million. That is a 30.9% jump from last year.
30.9%.
Yeah.
And sales only grew by 8.3%. That really shows the leverage, doesn't it?
That's the key right there. It shows they're getting so much more efficient with their fulfillment, their tech, everything.
So how do we see that efficiency?
It's in the margins. Their adjusted EBITDA margin went up by 100 basis points. It's now at 5.8%. And for students tuning in, 100 basis points is 1 full percentage point. For every dollar of sales, they're keeping 1 more cent as operating profit.
That's a huge deal at this scale.
It is. And even their gross margin improved by 50 basis points to 29.8%. This kind of game is structural, and it's what makes this report so strong.
And the bottom line just confirms it all. Diluted EPS grew from, basically $0.01 last year to $2.14 this quarter.
And the adjusted number is even better. Adjusted diluted EPS was $0.32, which is a 60% increase.
Wow.
So connecting all the dots, CHWY is showing it can navigate this tricky macroeconomic environment. They're building on the momentum we saw earlier in the year with some serious cost discipline. The other piece of this is cash flow. Free cash flow was up almost 16% for the quarter to $175.8 million. They are generating a lot of cash. And this raises a really important question for you, the learner, to think about. With all this cash piling up, where do they put it? Do they pour it into more expansion, like their new vet clinics, or do they use it to manage some of the risks they mentioned in their outlook?
Given CHWY's strong focus on auto ship, do you think they have secured a durable competitive advantage in the pet industry? Or is this easily replicated? Write your opinions in the comment section below. Thanks for being here. For more financial points of view, you are more than welcome to subscribe to our channel and give it a thumbs up. See you on the next one.